afternoon. This is Chris Robinson, Robinson Ag Marketing with today's post-close screen and livestock comments for Tuesday, November 4th, 2025, Election Day. We're going to wake up tomorrow with a lot of news. Um, the odds are suddenly higher that the government will reopen. I'll let you figure out why that might have happened now that we're done with the protest season and also we're done with the election. Things that make you say, hmm. And today in the grain market, it's pretty choppy trade, interesting trade. We did see a correction after making 16-month highs in the beans, though. Beans been on a complete tear, hit a lot of technical retracements. November 2026 beans managed to claw back half of the entire life of contract slide, the 289 slide. We came back this 1113, 1114 area halfway back. We see that lots of times. If you're not familiar with that, follow my letter. Sign up, robinsonagmarketing.com. You can go month to month. If you like it, keep it. If you hate it, delete it, block it. I do send out a letter every day, and then on the weekends I do about a 4 hour deep dive. It takes me about 4 hours to do it, and I do longer term charts, and that is how I base a lot of my analysis. A lot of people get lost in the bushels and the acres and the this and the that. And at the end of the day, my experience has been the only thing that matters is price. You have 1,000 people, you have 500 people tell you it's bullish, 500 people tell you it's bearish. Nobody's going to write you a check, though, if their opinion's wrong. And that's why we have to hedge. So you can have somebody tell you, pipe dreams and fairy tales and make you feel good. But if you don't get the price action, and if you're long or short and it hurts your bottom line, it doesn't really matter at the end of the day. So everybody has an opinion. You need to hedge in case your opinion's wrong. And that's exactly what I do, guys. I work with farmers and producers. I've been doing this since 2010. Prior to that, I spent 18 years on the floor trading my own account. I was not a broker. I did not have clients. For the last 15 years, I've worked with farmers and producers and have clients. My job is to help you make better cash sales, or if you're an end user, to lock in low prices when we have these, depressed markets, to try and catch moves like we just had in the soybeans. We rallied $1.10 in a month. Soybean meal jumped from 9-year lows to 4-month highs. So those types of things hurt end users. So what makes one person sad makes another person happy, right? So that's why you need to hedge. All right. So D's corn today ended the day at 431 and a half, down 2 3/4 cents. We did have about a 6 cent range there. If you look at November beans, they're in delivery, so I try and ignore those. But they were down 11.5 cents, 11.08 after trading as high as 11.19. Jam beans, 11.35 for a high, 11.12 as a low. We bounced 10 cents off the low. It could have just been short covering. At the end of the day, we did finish down 12 3/4 cents, and we did just hit 1 year highs in the contract, 1 year high to 16-month highs, depending on which contract you're looking at. So a great rally for producers, in spite of the fact that even though we've had this agreement or memorandum or understanding, whatever it was that came out of the meeting in South Korea, the Chinese have not bought a bushel of beans from us. They did, however, go buy 10 cargoes from Brazil. And right now, the Brazilian basis down there is sharply lower, which makes their beans more affordable than ours. It's in some cases $1 to $1.50 cheaper. So, maybe the Chinese will say, yes, we'll take a look at your U.S. soybeans now, but why would they pay $1.50 higher if they can get it, cheaper in Brazil? So that's going to be a continuing thing to worry about. Now they're already starting to talk about possibly it's too dry. They haven't had enough rain in the last 10 days in parts of Mato Grosso. We hear this every time of the year because it's their growing season, right? They do the same thing we do. We look for a drought. A drought means higher prices because you have lower yields. So you're going to start to hear that drumbeat of, oh, there's not enough rain, there's not enough rain. We need something like that. If you want to have sharply higher prices for December 2026 corn, we need some sort of weather issue in South America. It just comes down to that amount. And so hopefully it'll happen. It's a meteorological question. I am not a meteorologist, and I do not, as far as I can tell, they have a hard time telling you what's happening 10 days from now, much less 10 months from now. But that is going to have to be the driving force that gets us some sort of a rally going out in corn. So in the meantime, we have had a nice bounce. If you look at March corn when we hit 450, today we finished at 444 and three quarters, but the 450, 451 area, that's halfway back of the entire year's mess. So it was a midpoint, it was a reset button. Um, there's resistance up there. We'll see if we can get north of it. But if you're storing corn, which a lot of guys are, I would use the 40 the 45 cent bounce to get yourself a floor, because you don't want to be in a situation now 2 months from now where corn has gone back down to its contract lows and you did nothing and you protected nothing. I understand there's not a lot to work with. 40 cents does not get most people excited, but if we lose that 40 cents, I think you'd be singing a different tune. And you don't have to spend a whole lot. You can spend 6, 7, 8, 9 cents, certainly not more than 10 cents. It makes no sense to defend 40 cents worth of risk with a 30-cent option. That's ridiculous. So spend something less than 10 or less, and lock it in. It comes out to about 2 or 3 cents a month. You can protect for over 100 days there with that March option. I think it's the way to go. Um, Moving on to the beans. Jam beans finished down 12 and three quarter cent. We were down even another 10 cents on top of that. We were down about 22, 23 cents on the lows. We traded down to 11, 12 and a half with a high of 11.35. But again, this is coming on the heels of an amazing rally in the past month. No two ways about it. So it gave producers a huge gift. All the while, despite the fact that we haven't really moved, we moved what, two or three cargoes out of the Pacific Northwest last week, kind of a courtesy move right before the meeting. But they still have not come back in. There's still not been any hard data about how they're going to buy the 12 metric tons they said they'd buy between now and the end of the year, because the clock is ticking. But they did run down and buy 10 cargoes from Brazil. So take that for what it's worth. The fact that we've had a rally to 16-month highs, I think, is a blessing, given all the negative fundamentals that are out there. So take advantage of it. Setting a hedge is not calling a top. Making a cash sale is not putting a top in, because you can always re-own those bushels with a call option in case we are going to have another dollar rally. But I think if you're a farmer or producer, you get paid in the cash market. You don't get paid in the woulda, coulda, shoulda market. Chicago wheat did manage to finish the day up 6 and three quarter cent at 550. A really nice bounce there. Again, we were just down at 5-year lows, right? If you look at Dees wheat, you do the math, we were down at 492 on October 14th. So two and a half weeks, 3 weeks ago, we've gone from 492 to 550. 58 cents is a good bounce. If you were sitting on wheat in the bin, I think it makes sense to either roll up your floor, capture some of that 60 cents with a higher put, or make a sale and kind of wash your hands of it. If you think it's going to rally another 60 cents or another dollar, you can always re-own those bushels. But I think a 60-cent move on something that you've been sitting on for a while is something to at least consider making a move, right? And at least look at what type of hedges are available out there. You don't have to do anything. Nobody's going to force you to do anything, but you need to do something to, I think, to take a look at rewarding this rally. We're going to move over to the livestock. Sharply lower in the fat cattle, down $5, finished about $1.30 off of its lows. Fat cattle traded to 224.60, settled at 225.35. These fat cattle traded down to 227 and a quarter. Finished the day at 227 and change, down 440. Now, that was because they were worried they were going to open the border. Tomorrow, could we whipsaw and back and go higher? Absolutely, it's possible. The first 5 minutes of trade is very, very dicey in the cattle. You have to have your wits about you. It's very easy to be right and still get stopped out. That's why I like using the options. Options are probably your best suit for most producers, because you set the hedge, you set the option, you buy the option, and you don't get run over or stopped out when we have an $11 trading range like we did in feeders today. March feeders opened up. It looked like they were going to try and gap and go. And then we slid lower and we had kind of finished on our heels late in the day. In March feeders, everybody's still looking at where are we going to go fill that gap? Where do we fill the gap? The gap is from the 27th. That's the last big gap down. It doesn't start to get filled until we hit 331.30, and then there's a space all the way up. You're not going to believe this, to 345. So there's $7 there if we get into that gap. Lots of times the robots, the um, mechanical trading systems, the robotic trading systems, the algorithms, they love to go get those gaps. They just love to go get them. So we'll see if we can get in there tomorrow. Again, um, it's all going to come down to are we going to open the border or not? Mexico, as of today, the meeting this afternoon was no dice on reopening that border for now. Now that could change tomorrow, probably will. So, like you always say, stay tuned. Same bat channel, same bat story. We'll see what happens tomorrow with feeders. And in the lean hogs, finished down anywhere from 60 cents to a buck. Feb finished down a buck 27 at just the 81 level, 80.90. Again, that is a new 4-month low. That contract obviously undergoing liquidation. You go back to September 29th, one of the last reports we had, the pig report was very bullish. Boy, what did that do? Put the top in. Everybody was that likes to trade off the fundamentals was like, oh, not enough hogs, blah, 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 not enough supply, blah, blah, blah. And what happens? You turn around and we drop from 92 cents down to 80, 81, 82. So a 10-cent pullback. And that was after a tremendous rally that we had which started in the April, first time we had the April scare when the tariffs first came out. So we had gone from 71 to 93, and then here we are today down at 81. So hopefully you had some hedges there. Hopefully you're rolling down the hedges if you've got them, taking profits on them. That is why we hedge. So interesting day. Tomorrow is going to be probably even more interesting. We'll find out exactly when we find out more about what's going on with the U.S. border with the screwworm thing. But for now, again, the last information I had was they're going to keep the border closed because of screwworm. That should be fundamentally supportive for prices because that means less supply. Okay, have a good night. Just on a one final note, my phone number is 312-638-8868. If you want to have a 10 or 15-minute conversation, we can set something up. I can talk about how I would approach your risk management needs. Everybody's got a different story. I don't care if you've got 500 acres or thousands and thousands of acres. If you're looking for fresh eyes and different ideas on how to hedge, where you can stay flexible and you stay in control and you sell the grain when you want to sell it, as opposed to selling when you feel like you've got no other choice because prices have gone so low and you missed the boat. We can also talk about how you can reward rallies without actually selling the bushels, right? You set a hedge. We rallied $1.10, $1.20 in beans. Okay, you don't want to sell any beans? Get yourself a hedge. Protect that revenue. All right, have a good rest of the day. Take care.